Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. It is Thursday. It's been a long week and a lot's gone on. Yesterday we had the Fed meeting. Market responded pretty well. All right, Yellen dropped the word patient, and basically people think the economy's good enough to almost raise rates, but not everybody wants it yet. And she didn't really give clues that it's going to be in April. Now everyone's kind of speculating whether it's going to be June, whether it's going to be July or September, or who knows. But what we have to look at is the charts and look at the commitment to it. And when we came in today with the futures down 7-8 handles with no follow through to yesterday's move, we all had to figure out what can we stay with. Was yesterday valid? So we use retracement rules to measure commitment to see what's cooking. You go right here to the chart of the SPX, and very similar to the previous patterns. First of all, this is where we bottomed in February. Really nice move above the downtrend. We hit as high as 21.20 before a little bit of a corrective phase when we broke the 8 and 21-day moving average right here. What happened was a bit of a corrective phase down to retest this trend line, held the 100-day 2040, and since then it's been a little difficult because if you take a closer look, you'll see that every time you had a strong day, you didn't get follow through the next day, you opened lower, and this day pretty much, tested the whole entire range. Then all of a sudden a strong day. This day, what did it do? A little bit better before yesterday being on the lows and exploding. So was today a disappointment? I wouldn't say it was a disappointment. You think about where we came yesterday, so we did hold pretty much the top third. So I think if we were to stay above this general area, which if you write down at home right now, 2081 to today's low, which was 2085, I would deem that pretty constructive. I guess you could say some are saying we're starting some type of ascending channel here where you want to see us ride above versus break below. So I'd say as long as we stay above this area, I'm going to try and be constructive. We're near old highs, and it kind of was hard to rally today. You came in today, and oil that had its first up day yesterday was engulfed. The dollar that finally had a big down day was engulfed, and the banks were weak. So how much lift can you get in the S&P? So that's why you look at the S&P real quick again. It was an inside day, but then when you go to sectors that don't have the dollar focus, acted well. Look at this. IWM held in it all day. This actually had a breakout and held. Breakout right there, inside day, but you could have bought it red, went green, looks good. I talked about the alpha that in the small caps you can get, and it's trending really well. What did the mid caps do? Mid caps, inside day, not as strong as the small caps, held above the prior breakouts. I would say that's constructive. And then you had the bios, which have been a runaway train. Like, look at this move. Some guys are trying to short it. They're probably getting their teeth knocked out. Been above the 8-day ever since breaking this tight wedge type pattern, and looky, there you go. It's extended right now, so I wouldn't put on new buys, but doesn't mean it's also a short. You know my rule. I like to buy day 1, add day 2, sell day 3, and then cry when I don't own it day 4 and day 5. But anyway, into this move, I would not be looking to get too much size. But again, it doesn't mean it's going down. Look at what I said with oil. The USO, I kind of think it could have been a little worse. All right. Finally, yesterday, you had your engulfing bar. So some shorts probably got squeezed, and people who were saying, I'm going to look for a bounce because oil's down to 43 from 100, got a little caught today. Not much of a way to salvage it, but still above yesterday's low. The XLE, which also kind of engulfed, or you had an inside day, didn't fall apart. So you look here, it's holding in there. I would maybe be long versus today's low. But again, look at the trends here. I have some people actually sitting in from the College of South Carolina or Charlotte? Charleston. And I'm going to show you trends. I'm going to show you how easy it is right now. Not easy, but why you want to stick with trends without an opinion. Take a look at this chart here. Okay, does this look like a trend line that was broken? Yes. Does this look like another trend line that was broken? Does this look like major support that was broken? Do you know what this is right there? That's a 200-day moving average. If a stock or a sector goes below the 200-day moving average, is it strong or weak? Weak. So not only did the XLE go below the 200-day, it stayed below. So not only as a momentum trader do you sell when you get out of the 8 and 21-day, if you're an investor, you run for the hills if you break the 200-day and hold below. And then that's all the way where we are here with the XLE. So if you're trying to bottom feed and you're trying to be cute, okay, here it's a little bit of a mess. And just to show them, look at oil, guys. Everyone said, oh, how did this happen? How did this happen? You look at oil here, okay, and you look at the USO, which is an ETF for it. Does this look like a elevated trend that broke? And what's this, the 200-day right there for oil? For the USO is 36. Did it hold above it or break below it? Broke through it. Did it grab it back? Was it did it do a fake out below and come back above it? No. So was it real selling? Yes. So then you go back and you look at major support. This was one level, this was another level. Did it hold or did it break? It break. You get out of the way. And what has it done ever since? Nothing. And nothing to even to compare it to. So it's been in a downtrend. All right, below every moving average, not above all moving averages. So oil has been broken and it's been a sell. And I don't care who you think you are, whether you're an economist, whether you're looking at the supply and you're looking at the countries, charts tell you what's going on, and these have been in downtrends. But you do on the flip side, something I've been long for 3 days that people are excited about is what? Something you guys probably all use. You know what stock that is? Facebook. What did Facebook do today? It finally broke out. Does this look different than oil? Do you have a nice upper consolidation that has been going on for 9 months? That means a lot of people have been trying to position themselves after what has been an enormous move. You get a move like this in Facebook, okay, which was a beautiful trend. Here's your trend, which finally, broke, or it didn't even break, just went sideways, right? If you own Facebook from post-IPO price, a lot of people take profits, but what do you have here? A nice trend. Then after a nice trend, you have a sideways consolidation. So people who own it from down here sell it. People who think Facebook's going to north of 100, they buy it. It takes a lot of time. And then finally, buyers overtake the sellers, and then you get a breakout. Okay, and that's what happened today. Facebook, held. If you look a little closely here, what I've been going over lately. If you're on the VTF, you saw that I bought Facebook when it retested the 50-day here on the pull-in. That was also a retest of this prior breakout. Added here, and now it just took out 82 and closed above it. So hopefully we'll see a little bit of follow through tomorrow. I'm still in it. Maybe it's just come 4 days up, so it might take a break. But overall, is it above the 8 and 21-day moving average? Not below. Is it above the 200-day? So that shows you strength and accumulation, not like what you've seen in oil. Another stock that acted pretty well today was Twitter. Twitter's a little different, not the same exact pattern. Twitter had, earnings, which were right here. Nice gap up. It's been consolidating this nice gap up after a move from 38 to start the year, and then it just poked its head out today. So I am in more Twitter than I've been in a little while, and I'm back in options because I do think the market, does decent. It's going to see 50 again. Is it above the 8 and 21-day now? Yes. Is it above the 200-day? Is there a big gap here that's been defended showing power? Yes. So in my opinion, I think it takes out 50. This looks good. Apple took a day off. Big deal. I didn't even touch it today. I actually could have done a little red dog reversal from the short side, but I just stayed away. You look at the trend that Apple's been in also. Very nice trend. Gap up after earning. Here was your 8-day moving average. You had a really nice trend, and basically broke here, giving you a little bit of a corrective phase. Then what did it do? It retested where it broke out from, which happens especially after a move from 105. And now you take a closer look here on Apple. Okay, so basically you just had a move from 121 to almost 130. So a down day makes some sense. And what did it hit? It hit prior resistance going sideways. So in my opinion, it's above the 8 and 21-day. I think if you bought it here and you sold some strength, or you sold it when it traded above this 129.16 and hit one, you could have done a short here with an 8-cent risk on a red dog reversal on that reversal there. So we'll see what happens here. If we get a down open tomorrow, potentially I'll be looking to maybe re-enter. We'll see what happens. But overall, this was a nice compelling trade back to resistance, and now you kind of have to see what's next. I wouldn't be in a rush there. Baidu had its second day. Okay, we talked about the downtrend it's been trapped in. You had a igniting bar yesterday, took back some of the moving averages, and still pretty broken, but for cash flow trade, not too bad. One igniting day led to another, so that's a good day and a half trade, probably about 4 to 5% in Baidu. And now I think it might pause here at the downtrend and then figure out what's next there. BABA, still a frustrating stock, but it's acting a tiny bit better. It did kind of hold in there instead of just falling apart like it's been doing, at the trend line here. And then today it kind of poked above it, but still not great. Still choppy and not much you could do with that. This is when BABA was fluid. This is when it just came public. This is when it broke above 92. Here's when it was above the 8-day moving average in a strong trend. Here is when it broke above the post-IPO high, and there was your reversal. Since then, downtrend number 1 that failed right there. Gap down on earnings, downtrend number 2, trying to poke its head out. Still, nothing so exciting, but there's at least a little bit more, two-way trade versus just down, to the short side. Today, what was a little bit weaker, which is why we didn't rally, besides oil being weak, besides the drillers, the refiners, the banks were pretty weak. You look at the what's it called, the XLF. I wouldn't say game over, for the XLF, but you never really want to see a matching red day, especially since it wasn't really extended. It was trying to hold this moving average up here. It tried to break above this, so I'd be just a little careful here with the banks, with rates potentially not going higher. Higher rates are good for banks. That's part of their narrative, so it was down a bit. Some very smart guys in our office got a little messed up with Goldman Sachs today, as it looked good. And still looks fine. Think about where it came from. It came from 84. It broke above, and now it's just real choppy here. If I was in Goldman Sachs, I would say use this as an area to trade against. That's about 188. Bank of America has just been horrendous. It's different, right? Below moving averages, not above it. You have a range here that it was trying to hold. Did it break above it or break below it? Broke below it. So here's your inside wedge below the moving averages. It's an avoid. If you're still in it from the multiple years we've been talking about this ever since $8, it's just out of play. Does it mean it's game over for it? I don't know. It just means that it's in this really horrendous channel. Not much opportunities as an active trader. This is when it was trending above all the moving averages. Here is when it broke below the 200, and right now it's pretty much below it. So for me, it's somewhat of an avoid. The whole bank sector right now looks like an avoid. So I don't think the market's going to go too far if the bank sector is an avoid. So while we're talking about banks, you talk about TLTs. The TLTs, had a really nice move. We go over the technicals of this all the time. This is when it was uptrending. This is when it was above the 8-day moving average. We follow the 8-day moving average. We try and be long above it. So what happened here? The trend changed. That's when you get out. If you get out right here at 36, you don't have to sell the top. You sell when the trend changes. You didn't sit through this downward mess. And then all of a sudden, you had support, right? This was intermediate support. People were trading against it, okay? And then what happened is you had what we call an island bottom, where you gap below it, another day, you gap above it. So what is that? 2 bars trapped on an island, gap up. So the chart we posted was you probably could be long or at least cover your shorts versus this low. Next day, popped above it, and then PS, it's all the way back here. At this point, I don't know if it's a short, but I wouldn't be, jumping to be long it. But now if it stays above this 128, it could rebuild. So with all that said, the market's not running away from us. It's very spurty. There's a lot of power in some of the bios if you can handle the risk. You look at something today like Juno, big wide range bar, unbelievable, back to the highs. You look at Kite, big move, first day. Actually, this is interesting. First day, we talk about day 1. Maybe, this gets a day 2. But overall, nice bar there. A lot of other, farmers and bios have been the same. That's why you have, again, the IBB at highs here. But all stocks are not created equal, and they never are. That's why you have to be that specific, and especially when you have a tape that's lethargic, choppy, with not a lot of follow-through, you have to be careful on the amount of positions you have, the size you have, and your pricing. And if you do that, you can make money. If you don't do that, you're going to get frustrated. You're going to lose discipline. You might lose more than you need to on a given day when there's not that much to do and you should be watching the tournament. A lot of good games so far. Root for Albany, because that's my school tomorrow. That's when they play, 7:30. We're not expecting much, but maybe one win would be nice. But anyway, it's been a long week, lots of action. Hasn't been the easiest action. This whole year has been a little tougher, a little bit choppier. So if you're coming into the end of the first quarter and you're not happy with your performance, don't try and make it back the last 2 weeks. Just get yourself situated where you're thinking straight, because there's going to be a lot more action ahead of ourselves the rest of the year. You have 3 more quarters. So Rome wasn't built in a day. Either was 2015. Tomorrow's, what is it, triple witching. So typically there's a lot of shenanigans around strike prices, so just know where they are. know what you own, know why you own it, know your time frame, and have a good night. I'll see you tomorrow. Have a good day.